debated this at length internally. You know, how do you divide the stock universe? What's the best way to do that? Is it Freetrade determining, you know, what should be in this free version versus what should be in the premium version? Should we have a poll? Should we do this? Should we do that? And what we came to was to use an external source to determine that. So that's the indexes. Which translates roughly into everything anyone really knows other than these small cap, micro caps. So FTSE 350 plus AIM 100. So those are almost all the stocks that most people know. That's the vast majority of what our clients hold. And then if you want to invest in small cap, the micro cap, the so-called penny stocks, that's in the plus offering. And going forward, we're going to kind of keep that going. So if and when we add, say, Japanese stocks, we'll choose, you know, the index that represents those large cap, medium cap, market capitalization stocks, and then the smaller stuff will be in the plus universe. So that's how we came to it. That's how we settled on it. That also means that every quarter, at least for, like, say, the FTSE 350, every quarter gets rebalanced, and we're not the ones rebalancing it. It's FTSE, it's the London Stock Exchange, I think, that owns that. And just think about the FTSE 100. Every quarter, there's always a news story about some companies drop out and some companies come in. AIM 100, in the next quarter, you're sure that there's going to be some rebalancing there, and it's going to be interesting because there's always going to be the hot stock that's going up, the Ocado or the Boohoo, that's increasing in market cap and breaks into the AIM 100, and that's going to be super popular stock for our users, and it's going to be free. If it's a gold miner that didn't strike gold in the Sahara, maybe they drop out of the AIM 100, and if you still want to speculate on that asset, you might have to be a plus member.
And we are not going to stop there. iShares, Vanguard, and Invesco ETFs, they are part of the free universe. It's not like we are going to optimize for the plus universe only. We are going to increase both. We are going to add a lot of ETFs. We are basically reviewing, like, everything available on the LSE and working to make sure that you have hundreds, if not thousands, to choose from. And that applies for stocks as well. In plus, specifically, we want to, over time, provide all the stocks in the world. So I think that's a pretty strong offering, particularly over time, but just reflecting how exponentially we grew in terms of our universe, like right now, adding specs, IPOs, all that sort of stuff. It's probably good to reflect on that as well. And then I think limit orders don't require much explanation. I think it's, I personally love them. I've been using Plus for some time now. It's amazing to be able to go beyond and set my limits.
Of our current participants on the Zoom managed to get on Duncan's AMA a few months ago, kind of spelling out the vision for Plus, but both of these decisions really marries well with the vision for Plus, which is the more advanced account, right? So you're free, you start out with Freetrade, you got everything you really need to get started investing. And what is so if you were to ask a lot of the users, as we do, what's special about Freetrade, what's amazing about Freetrade compared to some of these other platforms you used or maybe haven't used in the past, it's simplicity is the number one thing. So getting going and it being really, really simple to get that first investment and build that portfolio, that's what we're optimizing for the free version of Freetrade. Advanced order types lives naturally in Plus, right? Penny stocks and AIM speculative stocks lives naturally in Plus. That's the natural separation between the two.
Yeah, and just a last thought on that topic. I mean, I personally love the pricing simplicity of Plus as well. Bill Ackman usually calls it the brain damage that you would incur if you think about these complicated things like Byzantine rule sets of, this trade size, you pay that much FX, but if you are, I don't know, like over 30 years old, you get like a slight discount, and then if you live in London, then it's different. It's like insane. So I think there is a lot of power and value in the simplicity of it as well. Just something to add.
A little bit of an aside, but it just kind of triggered in my head the whole numbers versus 9.99 or 10, kind of irrelevant. It kind of goes back to fractional shares, because that was one question last AMA around that. When are we going to be able to buy whole shares of U.S. stocks again? And you can with Plus, because you can set limit orders, real limit orders, and those are only in whole shares. So if you really have your heart set on owning a whole share of Tesla, it's possible tomorrow. We want to launch things as soon and fast as possible, but we decided that was one thing that was a deal breaker. Like, we can't launch SIPs unless we have transfers on day one, and day one you will be able to transfer. I don't know how long it will take. We're using a third-party processor that's kind of industry standard to make things faster and smoother and fully electronic. But you know, we still have to, I think, a few weeks or something like that.
Yeah, we'll have to work on it a little bit longer, but it's very strongly on the plan. We expect a lot of customers will come through transfers. Is that the $9.99 a month, whether I have £100 portfolio or 1 million in my SIP? Question from Stephen.
Yes, it's a flat fee. It doesn't matter how much you're holding in there.
Cool. Yeah, there is nothing else to add, I guess, to that topic. It's a flat.
Yeah, no hidden fees, right? Like, if you dig into a lot of these other SIP providers, I see Alex, our comms lead, shaking his head yes, because he actually did do the research, and it's crazy how many hidden fees there are. But we don't have any. It's fully transparent, right up front, how much you're going to be paying for your SIP. We obviously have ISAs now. We've got the GIA. We're going to have SIPs very, very soon. Next up will be other versions of ISAs. So there's the LISA, lifetime ISA. The benefit of that, of course, is the government gives you a kicker. I think it's like $1,000 a year or something. I believe that's what it is. And the other big one is JISAs, so junior ISAs. I think, Victor, you got an email the other day from an older gentleman saying he wanted to open up some JISAs for his 8
he has 7 grandchildren,
right?
and he'd want each of them to have a Freetrade account.
Yeah, so we're not done with account types, not just here, but also in Europe as well. So we are very conscious of that, and that's next up. More ISA.
Live pricing. That's the third one. Any thoughts on that, Adam?
Oh yeah, so live pricing. It's a bit of it's a sore point internally for us as well, and it's something that we're working on this quarter to get a better pricing for our customers. I think there's a little bit of kind of misinformation from what I've read on the forum about how we're interpreting that. So not to dwell on it too long, but the pricing that we receive, right? There's live pricing, but then there's also us pushing it to your device and how often that's refreshed. And that's something that we need to work on to get that pushed to the app more frequently. So right now, you're looking at like something, a minute or 2 minutes, your device is refreshing that price. That's not necessarily reflective that the price is wrong. It's just that we haven't pushed it to your device in a more recent time period, and that's going to increase. So we'd like it to be kind of like heartbeat frequency, and that's going to be the next version of that. That said, that's one issue, and then the other issue is the data quality that we're receiving. And there are many different exchanges out there. There's many different sources of pricing data. If you scroll down to the bottom of the screen on any stock in the app, you can see where the data source is coming from. And it depends on which stock, which is the best data source for us. maybe the best data source for London Stock Exchange traded stocks is probably, the London Stock Exchange. Unfortunately, they have a punitive license on pushing that out on devices. They want £4 a month. So if we were to swallow that cost, we'd have to increase costs. So that's kind of the trade-off. But we are going to provide some better data sources, especially for Plus members as well. So that's something that's coming relatively soon. We're super aware of.
Before we get into the thorny questions, maybe just like calling out Ben's comment about the stability of the app, what happened today. Anything we can share? I don't know if Ian is on the call, and I'm not sure.
Oh, I see Ian there. I mean, it was to be honest, it was a tough day at Freetrade today. Ian was in the office. I was trying to place a trade, and I'm like, what the fuck? I can't do it. I was like, Ian, what's this? And we saw it light up on Twitter, and it sucked. It was somewhat out of our control. That's not like a cop out, but we made a decision to build our tech on top of Google Cloud Platform. And if it goes down for a period, we're a bit hooped there. It's beyond our control. It's not the outcome that we want for our customers, but we try and do what we can. Ian, I can see you there. Do you want to say something on it? Because today it was a hot issue, right? Like, no. He's saying no.
Yeah.
I think he's got his kid in there or something.
Oh, there you go. I was muted.
Okay.
I was forcibly muted, so I was trying to talk.
Okay.
Yes, Zach, it was noticed somewhere other than Twitter. We have a very full page duty and Slack full of notifications going off, unfortunately. I think, irrespective almost of what approach you take, short of kind of launching a shuttle to the moon, when you build a product, you will try and design for some amount of resiliency, but you will kind of find some things either you didn't expect or that appear earlier than you might want them to. We had a couple of outages recently. All of them were third parties. That doesn't mean it's acceptable. There's always more we can do to mitigate that, have, say, redundancy against those third parties. And that's what we do every time. And hopefully, I think anybody who was here through kind of Christmas of last year maybe remembers, we didn't have a great run there with some basic orders, and that's completely different now. Some people as well might remember it used to take 90 minutes for you to find out about your order status. Now it takes, a few seconds. So we're always moving things forward as well as bringing features. I think someone mentioned that in the community. We're bringing up quality at the same time. We just got to balance those things out so that we keep people engaged and we keep the product moving in the right direction. Hopefully that's something that we get right. But days like today, it makes us go and have a look at and see how we can take that forward more quickly.
Yeah, excellent. And just to round off that topic really quickly, journalists would reach out to us when a certain large American zero-fee stockbroker goes down. That happened. Our comment is, look, any company that builds a really large app with a really large user base that pushes the envelope of what's possible is going to inevitably have outages. We are doing our best that it happens minimally or as few times as physically possible. Google Cloud Platform, as an ex-Googler, I definitely don't expect them to go down very often. But today showed that was possible. So we apologize for the inconvenience, but we'll do our best so that it doesn't really happen. Certain stocks that are going into Plus, we just enable a £1 commission for them to be available a la carte, if you will. Any thoughts on that, Adam?
Yeah. So a lot of our users, our customers now, they've signed up in 2020. What would you say? Majority now, I think, it's been great growth. But before February, we were charging £1 for instant orders. I saw someone actually had that idea on the forum. They're like, well, why don't you just make basic orders free and instant orders £1? It's like, we did that already. And then we made everything, all instant orders free when we moved everyone onto our technology platform, because it made sense from a cost perspective and also from a user perspective. And it is in the name, free trade, not free ISA. So that's where we're at, and I don't see that changing. I don't ever want to charge a commission for a trade ever again. And I love the simplicity of having tiered membership, and you know what your monthly charge is, and you can make an informed decision on what's in each package. And that's where we're at as of tomorrow, and that's where we're going to stay. I think we're not going to offer, I think there's a lot of well-meaning comments around the pricing structure, but we don't want to go and make it super complicated. Everything is a la carte. You can charge for this and this and this and this. And that's kind of what the incumbents do, right? They nickel and dime you on all sorts of different things. Ours is just simple. It's a really simple pricing structure. If you're ready to move up to become a Plus member, great. If not, stay free. You make a choice, but we're not going to charge trading commissions.
A lot of various forum members are asking about a different FX rate. Maybe we can clarify the realities of FX.
Yeah, so it's actually funny. Victor and I were chatting, and his other half was giving some feedback on what would make Plus even more compelling, because that's what the game is. We're starting off with the price. It's $9.99. It's not going to be compelling for everyone initially. Hopefully we've made it as compelling as possible with our prioritization of the features, but we're just going to make it better and better. We're not going to increase the price, because that was I think a relatively common question on the forum or a topic of debate, which is should it be £5 to start and then you can increase the price as it gets better and better. We're going the opposite. So we're saying we're starting with the price and we're going to make it more and more valuable over time and not increase the price. So that's where we're at. One suggestion, a pretty common one, is, hey, maybe you can alter the FX rate. That's something that we've considered. Frankly, I don't know that was the right thing to do initially. We'll look at it. I think a lot of the people on this call are crowdfunding investors, so they do care about us being a sustainable business. Not that our customers don't as well. And it wouldn't make economic sense, of course, to lower the FX fee to a point where we were kind of subsidizing it for Plus users and having lower net revenues. So that's a little bit of context around that. That said, I think how did we set that rate? Well, we think that that's a really fair FX rate. It costs us to do that. It costs us to change your GBP into USD, send it across the Atlantic, and settle the trades in USD for you, because you're buying real US stocks listed in New York, settled in New York, and we're doing that all for you, and that has a cost. And then we're charging an FX kind of spread versus a reference FX rate, which we don't get. We're not a bank. We're not Barclays. And we do that transparently, and we show that a lot more transparently than any other stockbroker I've ever seen. You got to go deep to see what Hargreaves Lansdown charges, 1.5% or something. Interactive investors like 1.5%. So 45 basis points, we think that's a fair FX rate. So I'll defend that. Whether we can there's a little bit of room there. Whether we want to adjust that a bit for Plus members, something we'll look at. So TBD. But for now, we'll just kind of keep it consistent across the board.
Let's get to another question, which I think is also very interesting. Iakia, if I pronounce his name right, I always see it either with a Y or an I never know how to pronounce it, I'm sorry. He's asking what's new about the European expansion.
Yeah, so Europe's been a tricky one. I think everyone knows that, not everyone knows, but in case you didn't know, we do have some Dutch and Irish customers that we onboarded near the start of the year. And it's been a bit of a holding pattern, to be honest, since then. We were optimistic about how I think Brexit negotiations were going to go around the passport. So the so-called passport, you get regulated by the FCA, you can go and sell your services throughout Europe. Then COVID hit, and we, to be honest, we're quite optimistic that people would be realistic, the politicians would be, and hey, let's extend this transition period for a year. Apparently not. So I think what we decided was we're not going to expand to Europe without a European license. That will come very soon, is expected. It's expected before Christmas. We do expect that, but we're waiting until we have confirmation that we have a European MiFID license before we roll out in earnest in Europe. So that's probably not going to happen until the start of 2021, once we get our European license, and then there's going to be a little bit of timing difference there. So that's kind of the revised timelines there.
Stephen asked about advertising, and he's seeing a lot of apps being advertised everywhere all the time. I'm going to address that question. We have a strategy, and we are going to pursue that strategy.
I sit beside Viktor here, and he's always moaning about how he can't watch YouTube without a X company ad followed by another X company ad, and it's really painful for you, isn't it, Viktor? I don't watch YouTube.
Well, it's extremely painful because we also understand quite crisply how much that costs. And the cost of that every month for those companies is in the multiple millions of pounds. Once you start investing into TV ads, that's potentially a £5 million commitment for a campaign. We have a strategy. We are doubling down on that strategy. We are investing a lot more money in marketing in Q4. One of the main outcomes, and someone asked this on the chat about free shares and the singular invite, that's going to change. We are going to accelerate free shares. They have been working amazingly for us. We are going to invest into advertising, and the little surprise that's coming at the end of this call may be connected to that. Let's see. We may show you something very exciting at the end of this. So we are going to double down on the channels that we already do well, and we are going to do them much, much better. It matters to us whether we acquire a customer at a certain amount or we acquire a customer at 10x or 100x at that amount. It matters. And a lot of you are investors, so you must appreciate that we are thoughtful about this. How are the plans for the Series B going? Is still the intention to raise?
Yeah, I mean, it's exactly on track for what we were planning. So we're in a fortunate position to be. We just closed $7 million in funding. I think it finally closed in July. So we're relatively flush for cash. We have a long runway ahead of us at the current burn rate. Our burn rate is decreasing every month because our revenue is increasing more than our expenses. So we're in a good place. But yeah, we're gonna raise a Series B, and that money is gonna go towards expanding to Europe and building out our engineering and product organization so that we can ship these features that everybody's wanting, including myself, and increase the quality of our platform as we scale. And that's gonna happen. I don't know when it's gonna be announced. You might have to read about it in TechCrunch, but it's not imminent or anything like that. As I said, we're in a great place right now, but we are going to take on some more capital before, in the next, say, 6 months or so.